Steve, Andy, what's going on today?
Hello, thank you, Scott. Hello, Andy.
Hello, Scott. Hello, Steve. Hello, everybody.
Hello, everybody. Got all of that in order. All right, so we're back off of a slow last week as we got together for our annual meeting slash family reunion at Trade Ideas. We had a good time, so we're back in the saddle, ready to get going again. Now, especially after yesterday's market holiday. So welcome to Trade of the Week. Every Tuesday we're here. Just a reminder, we're a software as a service subscription company. We are not registered investment advisors. We're going to talk about some market-related stuff today. So whatever you see or hear today is just my opinion. It should not be Andy's opinion. It should not be taken or construed as market financial advice. If you need that, you got to go seek out the registered professionals. All right. So Trade Idea has been around for about 15 years now, and very intense multi-levels of technology and good stuff in here. So we don't expect you to be able to learn it overnight. And that being said, we provide a lot of help and concierge services throughout the week, every week that the market's open. And starting with Barry's live trading room, he's sharing his desktop, trading his account live, and using Trade Ideas to demonstrate how he's using it in real time. There's a bunch of great traders in there as well that kind of keep the market and the group focused on things that are in play. So it's a free room. There's really no reason not to be in there if you're new and trying to get some maybe knowledge through osmosis, as they say. It's probably one of the best places to go because, I mean, he's running circles around $99 paid chat rooms. And the beauty of the Trade Ideas ecosystem is that Barry is a part of our group, and we're able to offer that to you. So not only is it good for trading education, it's good for TI, Trade Ideas software help as well throughout the day. Afternoon webinars. Well, we have the afternoon webinars. Yesterday was not available because of the holiday, but we're back on track today. So typically Monday, Tuesday, Wednesday, Thursday at 5 p.m. Eastern after the market's closed. We'll go over some stuff that kind of pertains to the day, the trading day, and maybe a few items depending upon which webinar you tune into. For instance, the Q&A demo on Wednesdays, Brad and Dan do spend a lot of time talking about new features and things coming around the corner on the Trade Ideas platform and what to expect next. Thursday, Jamie and Andy kind of take a look at what happened for the day and summarize it and encapsulate it in the Thursday trading studio. And then Friday, we don't have an afternoon webinar, but we do have a 3-hour support session that is during market hours by design, so we can demonstrate help. But it's a place for new users or older users alike to come in and in the same format you're seeing right here, go to webinar questions panel. You guys set the topic. If you need help constructing an alert, we can work on that together. If you want to figure out anything under the sun that we can answer, we'll do so. So my point being is Friday support sessions are open to the public, come one, come all, and there's no set content. So you guys set the pace. Some days we go the full 3 hours. Some days we only go 2 or 2.5, depending on what the people want to talk about and get demonstrated. And then lastly, TI University at the bottom. This is also Monday through Thursday during market hours. I did the 201 class today, and it starts over every Monday through Thursday, where Jamie finishes on the advanced class on Thursdays. So we no longer are able to do one-on-one training sessions. It's just diminishing returns. There's too many users with too many questions and only so many experts here to kind of show you how to use it. So that's the idea of Trade Ideas University. We do have a recorded link. You can always email info@trade-ideas.com if you want to get a look at the playlist that we have on all 4 of those. Otherwise, they restart in a live format every Monday and run Monday, Tuesday, Wednesday, Thursday. So that's it for the introduction stuff. As usual, I like to remind the theme, the brave new world that we're going to be living in as we go forward here is man and machine, human and machine. We're not interested in letting the machine take over and do everything, but we're interested in using the machine to curate ideas and give us a sample of high probabilities, and then use our human discretionary systems to deploy them, just like they do in the medical industry with AI, and now they're doing in many other industries with AI. We're the ones monitoring the high cream of the crop data, which is where the AI comes in, or technology for that matter. Even our custom scans, we're using to use technology to give us a list of actionable ideas to work together, not just blind faith throw everything at the wall and see what sticks. We still have a say in the matter. So today we'll go over market recap, some interesting stuff to talk about. Holly recap, very slow start and a very slow paced day. I'm sure Andy has some thoughts on that. The trade of the week, which the weekly webinar is actually named after, did not trigger today, but we'll talk about the genesis of that, and very similar to the last 3 weeks and how it fared, and how they all fared in today's market. And I don't really have any new features or new ideas or scans to share, so what I want to do is, I haven't done this in a while because the market's been so volatile, but now we seem to have got the volatility back in check, and there's some decent setups out there, I'm sure, if we just try to figure out where the best place to look. So human and machine, we'll get together and look at a few scans that I think are applicable to this current market. We'll talk about them together and mark them up and share them. And then if we have any chart requests at the end, we can always take a few if somebody wants us to take a look at them. So that's where we are. I've got my handy dandy drawing tool ready. So let's get started in the SPY for S&P 500. This is what we've been watching. Remember down here, we were in bear market territory for about a day and a half, and we have since bounced out of there. A very significant failure to roll over, I'll call it, happened there. And we've been slowly grinding higher. A nice sideways action that we talked about served it up and was just a nice catalyst to push it even higher from there. So it's been a slower, less volatile type of trading environment. But today we had a little give back. And I think it's really important to focus on the intraday, and we'll come back to the daily. But what I want to focus on, and the reason I made that comment in the main slide, life in the fast line, unless I said fast lane, what did I say? I said fast line. The reason Andy and I have always called this the fast line is because it's the faster of them. It's not a 20 period, it's not a 50 period, it's a 10. And in my experience over all these years and 10,000 hours plus on a 15-minute candlestick chart, when a market or an individual stock or anything with price action that's charted like this for that matter is in motion and in momentum and wants to stay in that same direction for the majority of the day, if not the whole day, the 10-period moving average is going to be the guiding hand. And even more so, and talking with a few people that have been doing training and whatnot, this is probably the most go-to interesting day trading setup of momentum that I can find. We can flip it upside down for those of you who like to see things that go up, but essentially we had a gap, we had some fall, and then we had congestion. And that congestion early in the day before the midday point, before lunchtime, if you can find something that's gapped down with good momentum and then sideways, it can't bounce, but it's going sideways. In my book, it's always just kind of waiting for this line to bring up the rear. And wouldn't you know it, every single instance today, once it touched, it worked. Once it touched, it worked. Once it touched, it worked. Now, as you get deeper in the day, I don't necessarily have as much faith in the later in the day ones, but boy, early in the day, the first push, whether it's up, gap up or down, let's do this, guys. Let's flip this and look at the SDS. You can maybe see it in a different light. Same stock, just the inverse ETF. All right, so here the inverse ETF gapped up, and the most important part of the day is about sideways action, maybe 45 minutes after the open. There's our sideways action, and the rising 10-period moving average forces the issue. Now, I don't like to wait, and I'm not day trading this market, but the comment I gave a month ago, if somebody told me I had to day trade this market, what method would I use? It would be this right here. And I wouldn't be waiting to buy for this green candle up here until it broke out. I'm not waiting. This is the kind of setup where I feel, in my experience, it has so much statistical probability behind it with no AI. It's just my 10,000 hours. I've seen it so many times. I'm willing to take an entry in something right here and not wait for the push, because in my mind, so many times it has worked that I want to be early in. And everybody always asks us that question, hey, can you give us the scan that shows us the stock before it makes that green candle? I wish we could, but honestly, this is about as close as I think I can get to that unusual request, is looking for this setup right there. You guys should imprint on that all day long. It doesn't matter if it's an inverse ETF, it doesn't matter if it's a stock, it doesn't matter if it's the major ETF of the market. This is how price action behaves. Now, in the second part of the day, I don't like it that much. And we can obviously see, if we go back to the SPYs, that, when you get to the last half hour of the day, this market is run by, robots. And so what you have here is basically these bots that were making a market in a down market all day are essentially covering and getting out. Very much like our own Holly. Holly, she doesn't stay in stocks overnight, and neither do these market-making robots. So I'm more interested in the first half of the day when it comes up to these momentum type setups than I am in the second half of the day. So that was that on the internals. I mean, when you guys see this, let's say, for instance, you're thinking about going long. You got a couple longs you're watching on that list, and you're just dying to buy them. And, we've had a pretty good market that's been grinding higher, and the dips have been bought. And so here you are. You're like, okay, here's the spiders today. It's going sideways, sideways. What you want to do is, if you've got that itch to go long, you're going to want to wait for a candle, if that was green, to close above that declining moving average, which means the momentum is no longer in play. But that didn't happen. Conversely, if you're a short seller and you're short and you're watching, you're already short a couple things. You're like, oh, I really like the way this market's setting up here. It's going sideways. Here comes the declining moving average. Yeah, this is a 10-period SMA for those that are still wondering, a simple moving average. The idea, oh man, I just threw myself off track. The idea, yes, so say if you're a short seller and you're currently holding a couple shorts, I guarantee you got that demon saying, oh, look, you're in the money here. You might want to cover it. You might want to cover half, take some profits. Well, looking at this setup that I'm showing you does nothing more than confirm your discretionary idea that maybe if I hold on to these things, like risk on, right, like Holly, this is a pretty good setup. Maybe I'd be foolish to cover and get out here too soon. Maybe I need to let this thing marinate and see if we get a second push lower. And if you can get that second push lower, you're going to get paid even nicer on these shorts. But my point is, use this line to gauge what's happening in the market today. I'm not just showing you this in hindsight to say, hey, look what you could have done here, could have done here. This could have right here turned around and closed higher. Well then, yeah, it's all bets are off now. If you're short, get out and cover, because this moving average was just breached by a closing 15-minute candle. All right, I know I'm really going off on this today, but I feel it's a great teachable moment. So in the bigger picture, all we have really is this little pullback, a little breathe. Markets have to breathe. We've had how many green candles in a row? Do you want to be the guy buying the 10th green candle in a row? I don't think so. We need this type of pullback. And I might add, pretty healthy today. It stopped and bounced a little bit at the close as the algorithms and the market makers bought and closed positions. The volume wasn't too intense to the downside. It was only 0.9. So this kind of has all the handprints and fingerprints of a needed market pullback, a backing and filling pullback. Quickly look at where they all closed. This one closed, popped back above its 50-day moving average. The Qs also extreme convergence here of the 10 and the 50. Well, price action used that to kind of settle in. We poked through it, tested it, no follow through, and bounced. Now we're sitting right on it. IWM didn't even get close to its averages, got close and then bounced right up. Not too bad. And then lastly, the Dow also spiking through its 50 and closing above. So all four closes today, there's really nothing to fear. And it's just one day of a light volume pullback and a breather. But if you were a momentum player today and you were trying to hit forehands on the tennis court when you should be going short and hitting backhands, I would advise you to maybe look at that the next time we have a nice broad-based sell-off or a broad-based rally. Andy? Anything?
Yeah, I agree with you. In the overall picture, I just kind of want to point out one thing. If you go back to the SPYs, all right, now go back to the SPYs a little bit better there.
Intraday or daily?
Well, no, the daily. Because I know you gave a real good lesson there on the intraday price action and that 10-period moving average. And yeah, when we were at Today Trader, we would pound that that home, man. It really does work, especially when there's momentum in the marketplace. And but going back to the daily, kind of what I wanted to show off, guys, is I've noticed with the algos over the years, these there's nothing textbook anymore when it comes to like moving averages. Seems like it's a little bit better with trend lines, but I wouldn't be surprised. I mean, I know we're through that 50-period moving average, but that doesn't hold that much weight to me. I mean, if you look what happened back in the first part of December, you can see we gapped up above that moving average. I'm sorry, am I in the wrong? Oh, you're drawing
I'm drawing because I think
Yeah.
you're going here, aren't you?
Well, no, that's the next place. I don't think we're quite there yet,
All right,
but that could be where we're going.
I'm trying to get it in there.
Not far. But anyway, what I want to drive home, because you hear us talking a lot about, this price action may move up into the, the 50-period moving average. Guys, those are anymore for me. It's just they're kind of general areas because I think with the algos over the years, everything has kind of gotten out of whack. And so what I'm saying is we're still at a critical place right now. Just because we're barely through the 50-period moving average, nothing has really changed in the market for me. I wouldn't be surprised to see us drop right back down. But the point I want to drive home is, when you're looking at these daily charts, it's different than what Steve was showing you when you're playing that momentum. You want that line to hold, and regardless. But when you're looking at the daily, you kind of gotta just kind of take these moving averages and these general areas with a grain of salt, and not try to pinpoint everything. Just kind of use them because as far as I'm concerned, we're still at resistance in this marketplace. Even going into today, I mean, it's going to take more than just one push on Friday with a green bar on a low volume day for me to suggest that, we're above the 50 now, we're going to attack this 200. There's a real good chance we do not, get to that 200.
Well, as you said it, I was just drawing that little X. That trend line might have something to say about not getting to that 200. So
exactly. So for me, the trend is still down.
It is higher lows and lower highs.
Absolutely.
Sorry.
I know a lot of people were probably thinking, after Friday, oh man, we've broken above the 50 now. We're definitely going to test this 200 and maybe the 280 level in the spot. No, I think I try to use general areas anymore and don't try to pinpoint these. And it makes for swing trading. It makes it difficult. But this is why, when I'm swing trading, if I'm going against the grain like this, may take a third of a position and then another third, and by the time it rolls over, maybe I'll take my final third. I don't draw a line in the sand and say, if it gets above this 50, I'm out. I know
it's not that exact. Yes,
it's not. It really isn't. And like I said, this is since the advent of high frequency trading back in 2007, 2008. It's not a clearest picture. There's a lot of slop in the charts anymore. But
yes, there is. Okay, so I guess that's probably it. The market is it's still right in that area where it hasn't really shown its hand. Again, today was not necessarily anything to get alarmed about. It's typical backing and filling. Let's see what tomorrow brings. Maybe tomorrow, guys, if tomorrow brings a nice steady grind higher where this moving average looks something a little bit more like this today, great. Let's key off of that. But every day is a new day around here. And some days are not going to have that. A lot of days are going to be choppy. And so in my opinion, when you have those choppy days, boy, there's nothing there. But when you have those days where it is lining up, for those of you who go to Vegas, when you lay those odds, that's when you want to lay your odds. When you see those trends, and if that's your style to try and jump in on a setup kind of like this right there, this is where you lay your odds right there on that setup. Not on a day when the market's just grinding back and forth and there's no real semblance to that. All right, great. So let's move on. Get rid of that and see. I think we're going to go to look at Holly. It's not very busy today, but you want to take the screen on that?
I sure will. All right, guys. Well, I'm glad kind of Steve gave that lesson as we look at the SPYs today, and let's look at what we had. All right, we had a gap down and a move lower pretty much all day long until the closing, maybe 45 minutes or maybe in the last 15 minutes. But it was a grind lower. But let's look at what Holly had to work with when she came into the day. And before I do that, I kind of want to show you what Holly does and how she does her optimizing and back testing. Not how she does it, but the data that she looks at. So going into the day, all right, remember Holly uses data going back for 64 days of data. And look at the most recent data that she's had that's been piling on all this other data that's, on this downtrend. She's had a nice big up move, a lot of up days coming into today. Okay, so even though we're in a downtrend, it's been over the last month a pretty nice bounce, and thus Holly came to work today with a lot of long strategies that made the cut. And what we mean by that, they had a certain winning percentage. You see the winning percentage right here and the profit factor. That's the grade they have to make the cut. And let's take a look at Holly Grail. You can see only one short today out of numerous longs. Let's take a look at Holly 2.0. Majority of them are long. We do have 2 shorts in there. And Holly Neo, she had all longs today to work with. So she didn't even have a backhand today, unfortunately. We cut her backhand off. So she was kind of ill-prepared coming into the day. Not intentionally. We don't know what's going to happen when these strategies come out each day. We don't know it's going to be a huge gap down and move down all day, but it's the way the back testing and optimization panned out. So she was kind of hand-tied going into the day with a limited number of short strategies, but she still performed quite well. And that's impressive to me when, let's start from the top with Holy Grail. She did have 2 shorts and 3 longs. Now, this is where you have an advantage. Holly came today with these strategies. We cannot just say, oh, the market's gapping out, let's take out all the long strategies. Okay, that's not how it works. That's not how the AI works. But as an advantage you have looking at the market and the way it's opening and the way it's trending down. Holly didn't have a trade go off today, I believe, for the first 30 minutes, maybe even 40 minutes. At least. Yep. Yeah, maybe in 40 minutes. And so you're looking at this price action, and a logical trader, an astute trader may say, hey, we're in a downtrend. I am not going to trade any longs until maybe this trend breaks. So, and you can see, let's take a look at the longs versus the shorts. Look at nice green in the shorts, red in the longs. Let's take a look at 2.0. Wow, this one got stopped out, unfortunately, because it ended up being a great trade, but barely got it right there, but it is a stop out nonetheless. But you can see here the shorts outperforming the long. We don't need to take a look at Neo because all she had was 3 longs, and she managed them well and risk off. She still got out for a positive day. So relative to the market, a great day for Holly. But what I did want to point out, guys, is where you have the advantage as if you're manually trading, which everybody is manually trading this. We don't have any auto trading going on right now, but you can manage these by just paying attention to what the market's doing. And like Steve said, it was just a gap down and a downtrend all day with the 10-period moving average forcing the action lower at several points today. So, think about it. If you ignored the shorts, the longs today and only played the shorts, you would have had a pretty darn good day. But take a look at some individual putting on the brakes. This was a good one. This DVN. You can see it didn't quite get the movement I thought it would get today with the market continuing to sell off, but nonetheless, still a positive trade there. Soup in. Let's take a look at this one. Very little pain. There's your entry. As you can see, could have even gotten a better entry on this one as well. I have to go back and look at a shorter time frame to see exactly when that went off, but nonetheless, a nice fading strategy, and that worked. And look at there was a couple I wanted to look at in Holly Grail. I thought this was a decent one. Unfortunately, because of the stop, my size didn't pick up very much, but still a very nice trade. Couple of big up moves from Friday, and then today Holly fades it right up here pretty much at the top, nowhere near the stop, and I was watching this play out in real time. Very good action there. That's a buck right there, over a buck. So good. Yeah, Waleed, I hope you got that. He says it was he says I was a great trade. Well, we all know you're a great trader, Waleed.
He meant it.
I know.
We know what you mean.
We know what you mean. But Steve, that's all I have to say about it.
Yeah,
I did want to point out those.
Yeah, well, that's why I put on the slide there, slow start. You know, anytime Holly takes 40 minutes to start get going, I would pay attention. But more importantly, the trade count was really interesting today. Very, very low trade count.
Oh, and one other thing. Good point, Steve. Yeah, it's Steve was talking about what 12
Yes,
12
that's on the
trades.
extreme low end of the bell curve of trade count. Yes.
And that's great to see because of all those long strategies she came to play with. None
Look
of
at
them
where the market has
very
come
few
from.
triggered. That's good.
I wanted to mention that. Thank you. If you put SPY back up, guys, Andy, just for a second. And what has Holly been back testing on for the last few weeks? A lot of green
That's
candles.
what I said.
So, yeah, so she wasn't really ready to come in and go, crazy short today. So what instead she gave us a light trade count, saying, "I'm sitting on my hands because this stuff isn't really triggering."
Exactly.
Interesting point. All right, cool.
I'll pass it back to you.
And so over here, guys, I've got the. Make sure I got my right screen on. I think I do. Yep. So I've got the trade of the week, Occidental Petroleum, which, by the way, was once again for the third week in a row located on the Let's Go Fishing. This is the live version today. It doesn't show that what we saw on Friday. But what we saw on Friday was basically there. I'm getting better at this.
You're getting better. I was gonna say you're good at that.
Yeah. It's a two-angled approach. Zoom.
It's the scroll out thing.
Zoom click.
Zoom. Yeah.
So that's what we saw. A beautiful looking chart coming out of nice sideways consolidation. I mean, hey, guys, what I talked about earlier, it's not exactly momentum, but still, once the price action got to this day, it started the day lower, but that's why I always say wait for the closing price, because again, this is the 10-period moving average. So again, nice sideways into the 10-period moving average. It's fractal in nature, this setup, you guys, whether it's on a 15-minute chart, in my opinion, or a daily, price action moved higher. This was a nice move out of lows, and the item that forced the action was, in fact, that 10-period. So this is what we had to go on Friday. Looked really good. We're trying to also pick bigger cap names. There's a lot of institutions who are now reading this email, so giving them something like Roku doesn't really help them all the time. They need something that's a little bit bigger as well to act on. So this was towards the top. It closed strong and closed also above its 50-day moving average. But I did, predicate in the email itself that this trade will be looking for the oil and industry. If oil and energy stocks do not rally as a sector, then maybe headwinds. And so this is the big backdrop for this particular trade, is to keep an eye on that. Not to mention, coming into today, we had a gap down, so all stocks were under pressure. If we take a quick look at oil gap down big, but hey, recovered hard, guys. That's a nice looking candle there, isn't it, Andy? Actually, is that today's? Yeah, that is today's candle, because I switched signals. So a very nice bottoming tail wick in oil. We could see some strength overnight in oil, and some follow through in oil tomorrow and the energy sector. So it did not trigger, but there was a few that we had looked at to try and see which ones might have been the best. And towards the end of the day, this one was one that closed rather strong. So Oxy was very similar to, again, the last 2 weeks. This is the kind of market we're in. We don't want to go finding stocks that are at 52-week highs right now. I don't think that's the backdrop that we want to be in. If the market was at 52-week highs, then hell yeah, we'd be looking at those scans all day long. The squeeze 52, the high comp rating, the ones with high comp rating. But the point is, if the market fails and we don't know what's going to happen, as we just said, we're still at kind of a crossroads here. If the market were to roll back over and test lows again, those high flyers that are up into their 52-week highs are going to get hit really hard. So we don't think it's really the backdrop for that type of scan. So again, for the third week in a row, we're looking for stuff that's coming down and breaking, hopefully trying to break a downtrend. Andy talked about a moment ago. Andy talked a moment ago about trend lines. Well, if you look at the trend line on this one, it's actually not too bad. I mean, it might actually even be breaking. The more I look at it, we'll send him up here, grab this guy down here, and it is. It's breaking its downtrend. So that was another plus. Nice sideways action at the trend line, and then boom. So one day does not make this call. All right, today wasn't the day for it to trigger, and that's why we don't always say it's live at the open. We needed some follow through to move higher on this one. So no trigger today. maybe tomorrow to come in. The trigger is at the highs of the candle right here. I think it's going to be 67.25. I'm not going to put that in as a price alert. Well, yes, I will, because we're going to share price alerts. So this will be our first price alert. Trade of the week. All right, that one's set. So going back to last week, NVIDIA gave a little bit back today. Still, NVIDIA broke its downtrend. Same action, sideways setup, so kind of a mirror action of this week as well. But NVIDIA gave some back today. Looks like it's up a tiny bit after hours, but in the bigger picture, no harm, no foul. Where did it stop? It stopped at the 10-period moving average, just like it did a couple days ago. So let's see what tomorrow brings for NVIDIA. Now, X is looking pretty good too, because I like oil, it had a nice little bottoming tail in the close, showing some buoyancy on the daily charts there. And interestingly enough, X is going to have earnings in about 6 days, but look at who had earnings recently. Steel Dynamics, ooh, the same sector. And did they ever enjoy their earnings? A nice bottoming tail and a big push higher, definitely outperforming anything else we saw today. So it's always good to look around the sector too and see what other stocks in the same sector, how they're reacting to earnings. This might translate, into some buoyancy for X. Matter of fact, I'm probably sure that's why X kind of closed off its lows so much, as opposed to a chip maker like NVIDIA. So there's our 3 examples from the last 3 trades of the week. There was a time where we were being very defensive and calling cash or calling SDS or treasuries or anything that we could that be defensive. But now we're back in the realm here where this market, if it decides it does want to go, a lot of stocks with these types of setups could very well move much higher. And so that's what we're focusing on. So what I wanted to do next is go through these 2 scans. And in real time, let's go through these 2 scans and in real time see if we can find something. Because in the past, what I've done is I've kind of done the homework ahead of time. And then I go to this list. And you guys probably wonder, well, why did you skip this one? Or why did you skip that? Well, so maybe we'll be able to do that this time. So I'm going to start with, we have 2 scans here, and they're both very similar in nature. They're both looking for stocks that are breaking their downtrends and turning and moving up back higher. The secret sauce that Let's Go Fishing is looking for solid companies on the balance sheet. These are not companies losing money. They're having solid earnings per share. They've got a decent debt to income ratio or the other revenue aspects. That's what's kind of looking to separate those from the others in this scan. This one down here, the trend change lubricant, we've used forever. It's a top list. It's a T window, so it's different from the A window. This is how it closed. It gave us a small grouping of ideas that might be good to mark up. And what's the secret sauce in this one? Well, we're not sorting by change. We're not sorting by volume. We're sorting by who's swimming naked with the biggest short float. Oh my God, look at this thing. So there we go. Short float percentage. Thank you. So LCI has only got 34 million in the circulation, but 56% are short. Let's click into that. What do you think is going to happen? Not a bad looking chart. It's a little spiky. Let's see what the data is on it. What's its average daily? Okay, it did almost 700,000 shares today. That's not bad. What do you notice here, guys? Right off the bat, up, sideways, and our fractal daily 10-period moving average, 4 days in a row, now keeping the price in play. So if this thing takes off, imagine being somebody who's short a 34 million share float. That's not a lot of shares. If you're wrong and the short squeeze starts to panic, meaning the shorts try to get out by buying to cover, well, they're competing with people buying to go long, and it becomes a perfect storm of buying. And that could happen right above the high of this candle. So let's set an alert for this one to start with. That was 8.18, so we'll go 8.19. And very important in the notes to remind everybody, you'll see these notes when they translate in your cloud link, 56% caps lock, short the float, exclamation points. Meaning, if this thing triggers, what I just did is gave myself even more. I mean, if I have to give myself, 1, 2, 3, 4.5 stars, I'll do that too, but I'll remind myself that I saw something here, and in my unemotional state, if this thing triggers in the market, I want to remind myself why I liked it. So that's definitely top of the list. The next one down also has a big short float and only 29 million shares. Let's see what the pattern looks like. not bad. Kind of the train leaving the station. These are people trying to quietly walk out the door before the stampede, maybe to cover their shorts. So I don't know, let's see. We're gonna look left. It's gonna run into some resistance right there. I don't really know how I would do a setup on this. Maybe just watch it for a pullback. Maybe we'll try and get tricky right here and signify if it does pull back to this level. Let's observe it. Pull back. Spell. Pull back alert. Observe price action. So ideally, if it pull back tomorrow and hit that moving average, or wicks through and pops back up and closes above that moving average, there could be a case to be made. But my point is I don't want to chase it here. So we're going to put it lower, down at, where did we put it? We already put it there, didn't we? Yeah, we did. So we don't want to go short. We want to go long because it's a pullback alert. And there it is. So I'm kind of eyeballing that one. When you see this pattern, it kind of signifies that these short sellers might be slowly starting to panic. You might not get a pullback on this, but at the same time, I don't want to be a chaser. Low price stock, again, a high short float, and only 8 million in the shares. I mean, if you guys like the crazy, dangerous stuff, this thing could get real squirrely real quickly. I'm gonna go ahead and put it in here, but I'm gonna definitely put a caveat in. It only traded a lot of shares today, but typically this thing has a very low float. So that's the plus side for those who like to play the action. And I do mean action because low floats can cut both ways. 345, so we'll go to 344, 46. And here's where we're gonna go. Caps lock, low float, 8 million shares, caution, advanced only. All right, we'll set that. And as we start to go down the line here, remember I'm sorting by short float, so we're losing the short float as we go lower. Well, what do we got here? Stock that 2 days in a row flirted sideways with the moving average and doesn't want to, I mean, got to mark this one up too, I'm sorry. I'm going to use the top of this candle. 1684, we'll go 1685. Sideways action, low float, high short percentage. All right, let's see what else we get. Again, this is the first time I've really looked at these guys, so I'm giving you the reasons why. This one would have been much more interesting probably to me back here. So I'm going to say no on that one. It's got a lot of work to do. It's a really nice slow grinding saucer bottom, big lots. This is a retail stock. It's going to run into headwinds there for sure.
It's a tough one.
I'm gonna only go with the big 4-star ones today, not the tough ones. Not really seeing much there. Low 82,000 shares. Forget it. No. Dean Foods, the old Dean Foods. People got to eat, but we don't think about that. We look at price action, not what you speculate on human beings need to do. This thing found some upside resistance today. I don't know. You see anything here, Andy?
It's a tough one. Even you got that ledge going back to the end of November, where it kind of went sideways. No, at the end of November there, where it's about to run into.
Yeah. Yep.
You're at the first. Yeah.
Yeah.
Yeah, it needs to get. Yeah, there you go. I can see the potential. It's one of those. If it doesn't work, you just cut.
Let's give it a little slop. Let's give it a little slop. Call it above $5.
There you go.
So sometimes when stocks get back above $5, the institutions can jump back in their mandate. Just gonna leave it at that. Long at 501. Okay. What else we got here? Nope, not gonna chase that. Not gonna use a pullback. Low volume, and we're getting down to the bottom of the barrel here for low float. So this one's gonna go back in the cupboard. Now we're gonna see. Now this one is an alert. So I'm basically looking at the close starting right here. This was the last stuff to come through, but there's a lot of repeats. Let's see if we can find anything in the final hour that might deserve a markup. Because right now we can share out 1, 2, 3, 4, 5. We got 6 so far, 6 longs. And again, guys, I wasn't really wanting to do this exercise back here when we were doing all this stuff because the volatility was just crazy. So now we're getting more returns in some of these scans as things settle down, and that's what we were asking about before. Let's wait for things to settle down a little bit. So UPS, how do you look? Very interesting. Would have been much more interesting on Friday, right? Coming out of that, I wish we had seen that back here. It's running into resistance. I'm not going to touch that. Here's our friend Steel D. So Steel Dynamics is possibly foreshadowing what could happen in earnings next week with X, US Steel. Same company, we'll see. Wage. It's had 3 greens in a row. I'm not really interested in chasing that. I'm looking for something more of a sideways action. No, nothing there. Wells Fargo, Steel. Boy, we haven't had a lot today, did we, Andy? We didn't get a lot at all.
We didn't.
That's it. So the pickings are slim there. That's pretty much it. So what I'm going to do is I'm going to mark this up and create a shareable link for you all. And while we're doing that, we have time for some chart requests. So if you want to think of a few, we can go over a few while I'm dropping this link. It helps to know if you're long or short or thinking about long or short. We can let you know what we see. So here's 6 working alerts. Whoops, let's try that again. Why is it not doing that? There we go. All right, I've copied these 6 alerts, which are able to be received by you guys. I'm going to drop them in the chat window. Six ideas for the week. And there's the cloud code. All right, y'all. So in the chat window, I created a cloud link that if you open it up and use the cloud to open it up, it will simply add those 6 untriggered alerts, those waiting alerts. It'll add them to your mix, whatever you guys have already. And so if they happen to do trigger throughout the week, you know, we just went over them and talked about a few notes and a few reasons. Hopefully it'll make sense and maybe that'll help somebody out there. All right, so we're at the chart section. Looks like Prabhav's got the first. Oh, nope, John's got the first one. Nope, Friend's got the first one. Ruby, okay. So we definitely have a few requests coming in, thank you. Not a bad looking chart. Really nice pullback, not too sideways, but riding that moving average higher. I like it. I think you said you're long at 409, so you're in the money. I would say don't let that thing stop below this rising moving average. See how it tried a couple times today, but it didn't resolve.
2 moving averages there.
You'd be kicking yourself if you were watching this thing midday and you got all in the moment because it traded below. Well, many times it'll trade below, then pop right back up, and that only increases the resolve of the bulls when they see something like that. So I wouldn't wait for a close below these 2 lows from yesterday or today, and that pretty much keeps you in the money for the most part. Not bad. He said resistance. Let's look left. You're going to see a giant pivot level right here. Okay, resistance, 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 support, support, support. That is the definition of that level. Let me redraw those damn lines. So, you know, 430, 435, maybe you could keep an eye, maybe sell half if you get there and see if the other half has the ability to go through. It's totally your call, but sometimes people might do that. All right, so that was our Ruby. MDWD for John. And any commentary on that one? John, let's see. Long at 540. All right.
Was that earnings today or something? Or some sort of news?
Didn't see earnings. Well, the stock opened, ran high, and then pretty much gave it all back. I'm not liking the way it's looking. It really needs to hold this obvious level right there. I hate to say it, but in my experience, these charts that take off on the chart and then giant reversal, even a red wick there, red candle body, not exactly on the side you want to be, but doesn't mean that that you can't manage risk from here. But I'd manage risk and watch that 482 level. Opinion on CGC. Yes, this one has been moving lately. Well, this might be a classic example, CGC, of needing a few more days to set up for the perfect setup. right? Explosive move, and then sideways, 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 lower volume, waiting for this guy to come up and bring up the rear. Maybe you're 3 days away, but it might get really interesting if this thing, goes sideways into that. That's where it might look interesting up there. But if you're already in it, what's your opinion on C? So that's my opinion on CGC. Whether you're in it or not, that would be the best case. Let it work off some energy sideways. But as this moving average comes up to pick up the price action, that might be the inflection point you want.
I love the volume and that up move that it had. That's a good sign. Yep.
Okay, what's next? Looks like this is the last one because two people, oh, it's the same person. Okay, two more and we're good to go. NIO and then Cron. Andy can answer that question for Mac supported for you, Sekar. So let's go to the first one, NIO, NIO, I mean. No indication if you're long or short. I'm not really seeing anything interesting here to the long side. If you were thinking short, possibly, but we're only at a $6 stock here. You can see, I think in my opinion, how much of this 50-period moving average has kind of put a lid on prices. You had two attempts to go above but couldn't close above it. So there's another instance of not being able to close above a moving average. And then it's just been held down ever since. And then today it actually broke another moving average. It doesn't look bullish to me, but I would keep an eye on this moving average here. If it ever does want to break back above, what is that, $7, then you might be more interested. It might be more interesting. All right, last one, then we'll bring in Scott, is Cron. Let's take a look at Cron. Oops, let's get my cursor back. Blow off wick. It's the first thing I see is this big move higher. We got above the congestion right here. Well, not quite a day and a half. I've done the sermon on what a day and a half does. Nice move higher this day, and then a blow off into follow through the following day, and then a reversal. So this thing needs to reset, in my opinion. Where could it go from here that might make it interesting? Sure, this moving average could continue to come up, maybe a little bit of a pullback. And if it holds those levels, that would be the place. But the way it looks at the moment, this wick today is a blow-off wick. If we look at the intraday, we see a early morning algo push and then an immediate reversal, which never really got taken back out again. So this is a sign of a little bit of exhaustion here. Not a bad chart. It looks like a new issue, I believe. It's making higher lows and higher highs. The problem is today was the higher high. We're going to need a couple of days of reset, I think, to let this thing settle back in, and maybe a perfect entry point, might be just a little bit of a gap fill or even a test of that area down there. So maybe it's more interesting if it can come back and break under 14 and you could get a better price than the people who bought up here at 15.50 today. How do I define congestion? Congestion today in the spiders is a great example, and it's fractal once again. Here's your congestion right here on a 15-minute chart. Nice congestion of a short term. Congestion here on the daily chart. We ran into that for about 5 or 6 days. Just sideways action at a level that makes sense underneath there. So I was already kind of expecting that when the price got there, and I know we talked about it, to find some, I think I remember saying that the best case scenario is some sideways action, sideways congestion, and then the strength to push and move up through all that. And that's what they got. But will it hold? We'll find out. There's really no reason to get worried right now. Your guess is going to be more of a macroeconomic guess versus where we're going to go next. But the moment I think that we have a cue or a sign or a tell as to what direction this market does want to go, we'll definitely be happy to share it with you. All right, so that's it. Unless Andy's got anything, we'll bring in Scott to talk about some things coming up and some discount codes.
Nope, I'm good.
All right. Yeah, a couple things coming up. You all should get real excited for the test drive that's coming up the week of February 4th. You can sign up through the 6th and still get 5 full trading days, but we recommend signing up before that week so that you can join us for all the special webinars and support items that we will have going on. It's your chance to try Trade Ideas Premium for 5 days. So you just go to tradeideas.com/test drive and sign up for that. It does cost almost $9. It's at $8.88 that covers your exchange fees and data for that whole week and all the extra overhead that we have with the support and all of that. So we look forward to seeing all of you not yet premium members there in February. So sign up. It's going to be good. There's a ebook that both Andy and Steve contributed chapters to, and it's How to Win in a Post-BTFD Market. It gives you 5 strategies. It's been very timely that we released it about this time last year, right on time for the crazy market. And it's been pretty valuable to everyone that's downloaded it so far. We get a lot of great reviews on it. If you don't have it yet, just go to trade-ideas.com/ebook, plug in your email address, and you'll get the download link. Keep that handy. Go to, we have a promo code, I guess.
You skipped
podcast. I have the
podcast.
slide order kind of misunderstood. Yeah, we also have a podcast. If you want to go back to that one, I missed that one. Yeah. Just search for Trade Ideas Podcast wherever you listen to podcasts and get ready for the next episode. We release these on Fridays. We didn't have one last week because we were in our company meetings, but we've started season 3. So if you're into podcasts, stay tuned for that. There's also some great archived ones you can go ahead and listen to while you wait. We've got some guest ones. There is a discount code. Hey, any of you that want to become a subscriber right now can use Get Started, all caps. It's case sensitive, to save 15% off your first month or year of Trade Ideas. This gets you going, and you can also use this to upgrade from any standard plan to the premium plans and save 15% off that first installment. Any questions, just shoot us an email to info@trade-ideas.com. That's the best place to send all your questions because it gets routed through our help desk software to the appropriate team member that knows the most about the question you're asking. And you can also follow Steve at Today Trader on Twitter and harass him via direct message all you want. We also have @TradeIdeas as our main account. Facebook.com/TradeIdeasPro is the page to like on Facebook so you can share our updates with your buddies. Thank you, Steve. Thank you, Andy. And we'll have the recording up later on. Shoot you an email when it's ready.
See you next time.
Yep. Thanks.
All right, guys. See you Thursday.
Bye.